Hello, everyone, and thank you for joining our second CFR training webinar for the 2021 calendar year Consolidated Fiscal Report. Yesterday, we had a pretty good-sized crowd, and that session's recording will be posted shortly, along with today's session on YouTube. We will be sending out an email to all providers notifying them of when they are available and when they could be found. Today, we're supposed to have about 750. We're a little short as of right now, but I'm assuming people will be trickling in. So hopefully today's session is just as beneficial as it was yesterday for you. My name is Ken Glenmeyer. I am one of the representatives from OPWDD, and I will be hosting today's webinar. Today's panelists will be as follows. Representing OASIS is Paul Green and Paul Sutton. Representing OMH is Ann Hoffman, Michelle Chelinski, and Kathy Katz. Representing OPWDD is Francis Basilio, Alpa Amin, and Kenneth Glenmeyer. Representing SED is Jahida Benatar and Nelly Gutus. And representing DOH is Jeffrey Nickerson. Also, same as yesterday, we have a survey that will pop up at the end of the event. We would greatly appreciate you taking the time to fill out the survey so that we could continue to make these trainings better. Session 2 will be covering the following: general and agency-specific changes and highlights, steps to a successful submission, COVID-19 and COVID-19S schedules, SUPP-1 schedule, and then also claims reporting for DMH 2 and 3. So this is important, and if you guys were participating yesterday, hopefully you had the opportunity to check out the previous Q&As that have been posted on the OMH website. We strongly encourage all attendees to ask questions through the Q&A function in the webinar. It is on your right-hand side, and you might have to click the arrow next to the Q&A to open up the dialog box. If you don't see it, you might have to click the 3 dots at the bottom of the WebEx and then click Q&A. We will not be answering any questions today, but plan on answering all the questions and posting answers online, along with a recording of this webinar so that everyone could get the benefit of the webinar and the questions asked. This is always good to know. Slideshows on how to contact each agency. Most of us are working a hybrid schedule, meaning in office and also remote. So all the agencies still prefer email contact. It'll be the best way to get a hold of us. In general, the New York State agencies, once again, prefer email contact. So, and also the New York State Office of Children and Family Services providers may submit questions regarding their CFR submission to the OMH CFR unit. This slide represents any claims questions or the contact information. Once again, emails are the preferred method. All right, by the end of the seminar, we hope to accomplish the following goals. We hope that to give you information on the contact information. We want to identify any major changes that have occurred since the release of the January 1st, 2020 to December 31st, 2020 CFR manual. We want to discuss important issues and policies, principles, and rules regarding completion of the CFR via the CFRS software. We want to provide guidance regarding the completion of the SUPP-1 and COVID-19, COVID-19S informational schedules. And we want to help providers become familiar with the claiming and supplemental schedules. I will now pass on the presenting to our first panelist for today's session, Ann Hoffman.
CFR highlights, supplementals, and changes.
And can you start from the beginning? Sorry, you were on mute. I just unmuted you. Sorry about that.
Thank you. CFR highlights, supplementals, and changes. Any changes from the previous CFR manual will be detailed in the 2021 transmittal letter. It is important to be mindful of the changes listed in the transmittal letter when completing the CFR. Changes in funding source codes or program codes may require immediate corrections when carrying data forward from a prior version of the CFR software to the current version of the CFR software. Top 10 internal control to prevent and detect fraud. A KPMG fraud survey found that organizations are reporting more experiences of fraud than in prior years, and that 3 out of 4 organizations have uncovered fraud. The New York State Office of Mental Health Bureau of Audit has provided the following list of internal controls to assist you in preventing and detecting fraud at your agency. The first 5 internal controls: separation of duties, monthly reconciliations, credit card access restrictions, providing the Board of Directors oversight of agency operations and management, written policies and procedures. The second 5 internal controls: ensure agency assets are used only for official business, protect cash, check collections, and all cash funds, protect checks against fraudulent use, and avoid or discourage related party transactions. Detailed information can be found on the OMH website at the link provided. Recorded webinars. Previous recorded webinars are available at the YouTube addresses listed. The recording of the current CFR training presentation will be added to the OPWDD YouTube page on a date to be determined. Questions and answers. Written responses to questions and answers from previous CFR training presentations are available at the address listed. The written response to the questions and answers from the current CFR training presentation will be added to the OMH website at a date to be determined. Importing and formatting a text file. Importing and formatting a text file is a time-saving method of populating the CFR directly from spreadsheets. Refer to the Help menu in the CFR software for a list of text files that can be imported and for guidance on formatting a text file. Changes. Section 2, Submission Requirements. The combination and OMH only matrices were revised to include Article 31 hospitals. General CFR submission requirements were revised for certification schedules with an electronic signature. Section 8, General Instructions. In the CFR Resources and General Information section, the Consolidated Budget Reporting and Claiming Manual has been discontinued. All related questions should be directed to the specific New York State agency budget and/or contract personnel. Frequently asked questions. Paycheck Protection Program, PPP, loan forgiveness. The amount of the loan forgiveness of the PPP is reported on the CFR in the Revenue section. The amount of the loan forgiveness of the PPP should be reported on the CFR in the program or programs in which the PPP loan was reported as being used for eligible expenses. Section 11, Independent Accountants Report. This section has been updated to reflect the impact of the Statement of Auditing Standards, SAS 134, Auditor Reporting and Amendments, including amendments discussing disclosures in the audit of financial statements. This new language is effective for the 2021 calendar year CFR and future CFR submissions. Sections 33B and 33C. The General Information section of the COVID-19 schedule has been updated to allow for reporting a first draw and/or a second draw PPP loan. This change also applies to the General Information section of the COVID-19 S schedule. Section 43, Appendix J, has been updated to reflect the program title change from supported housing to supportive housing. Section 44, Appendix K, has been updated for new guidance issued under 2 CFR 200. Section 51, Appendix R, has been updated for the revised Physician Title Code 603. Electronic signature. Sections 10, 11, and 12 have been updated regarding e-signed certification schedules. Electronically signed certification schedules must be uploaded through the CFR upload page, and the checkbox attestation must be selected accordingly. This is the signature attestation, the electronically signed certification schedules. OMH supplementals changes and highlights. A picture of the New York State Office of Mental Health building at 44 Holland Avenue in Albany. OMH has 4 supplemental schedules. Schedule OMH-1, Units of Service by Program Site. Appendix F provides the measurement for the units of service for each OMH program. The total units of service on OMH-1 transfers to CFR-1, line 13, and DMH-1, line 3. The total units of service on OMH-1 must match the aggregate total units of service on DMH-3 for the same program. Units of service are very important to us. They are used to determine the cost per unit of service for financial planning. This is an example of units of service for a clinic treatment program. The OMH-1 units of service by program is only completed for OMH programs that file a full CFR. Select a program and site from the drop-down boxes. Scroll down to your program, enter data, and save. Schedule OMH-2, Medicaid units of service by program site. OMH-2 is completed for program sites that accrued Medicaid fee-for-service or Medicaid managed care revenue for services provided. Units of service are reported separately. The total program units of service reported for Medicaid fee-for-service and Medicaid managed care will transfer from OMH-2 to CFR-1, lines 13A and 13B, respectively. The Medicaid units of service on the OMH-2 should not be more than the Medicaid units of service reported on the OMH-1. This is an example of Medicaid fee-for-service and Medicaid managed care units of service for a clinic treatment program. The OMH-2 Medicaid units of service by program site is only completed for OMH programs that file a full CFR and have program sites that are eligible to bill Medicaid for the services provided. This schedule is set up the same way as the OMH-1, except it has been updated to track units of service separately for Medicaid fee-for-service revenues and Medicaid managed care revenues. Each line has an A and a B for this purpose. This is the second half of the OMH-2 schedule. Schedule OMH-3, Client Information. Enter the number of clients served. The caseload at the start of the current period should equal the caseload at the end of the prior period. This is an example of a program without an ongoing caseload. The OMH-3 captures the number of persons served by the program and site for the year. The beginning and ending numbers on lines 1 and 4 will be 0. Indicate the same number of persons served on lines 2 and 3. These numbers will indicate how many people were seen and how many left. This is an example of a program with an ongoing caseload. Indicate the number of persons on the active caseload as of the beginning of the reporting period on line 1. Indicate the number of persons admitted to the program site during the reporting period on line 2. Indicate the number of persons terminated from active program enrollment during the reporting period on line 3. This should include all persons not seen or contacted within 90 days. Determine the active caseload as of the end of the reporting period on line 4 by adding lines 1 and 2 and subtracting line 3. Schedule OMH4, Units of Service by Payer by Program Site. OMH4 is for the OMH Licensed Clinic Treatment Program 2100. Providers must report units of service and revenue by payer. Units of service data is used in the safety net payment calculation. Total units of service on OMH4, line 15, should be equal or similar to OMH1, line 16. This is an example of the OMH4 schedule. This schedule must be completed based on date of service rendered and only for services provided during the reporting period. For the purposes of this schedule, a visit is defined as including all procedures provided to a patient on the same day and is referred to as a threshold visit. OMH changes. Section 1. OMH inpatient program codes 2010 and 3010 are no longer required to be reported on the CFR for reporting periods beginning January 1st, 2021 or later. Section 2. The OMH only and combination matrices were updated to allow Article 31 hospital providers to file an Article 28 abbreviated CFR. Section 27, OMH4, the addition of essential plan on line 8. Section 39, Appendix F, the addition of program code 0780. The deletion of program codes 1810, 2010, and 3010. The revision to program codes and/or descriptions for programs 0680, 2980, 4920, 5070, and 6060. Section 47, Appendix N, the addition of funding source codes 041H, 041Z, 044C, and 044S. Okay. Highlights. Mental Health Provider Data Exchange, MHPD. OMH providers should continue to use MHPD to submit corrections, openings, and closures of programs. The programs and sites reported on your CFR should match our concerts database. And attachment A is automatically generated and mailed with each desk review letter. It compares the programs listed in our concerts database versus what you reported on your CFR. Any discrepancies must be resolved. OMH providers must ensure supporting documentation exists for each number reported on the CFR. Maintain a clear and concise audit trail between the CFR and financial books and records, and document procedures and allocations used to complete the CFR to ensure staff and others reviewing the CFR can arrive at the same determination. DOH, supplementals, changes, and highlights. A full CFR is required that includes the schedules listed. Refer to Appendix HH for programs that must be reported on the CFR. To determine the program site identification number, use the first 4 digits of your agency code, followed by the first 3 digits of your program code. Refer to Appendix HH for the units of service measurement for each DOH program. Integrated Outpatient Services Clinic, IOS. On the CFR, the IOS clinic is reported under program code 2100 for OMH, 3520 for OASIS, and 1580 for DOH. An allocation between OMH OASIS, and DOH must be made if the provider operated both OMH and OASIS clinics prior to being designated as an iOS clinic. Programs are required to maintain support, demonstrating they have used a reasonable method of allocating costs. Refer to Appendix GG for further instructions. OCFS supplementals, changes, and highlights. OCFS providers may submit questions regarding their CFR submission to the OMH CFR unit. A full CFR is required that includes the schedules listed. Refer to Appendix II for programs that must be reported on the CFR. To determine the program site identification number, use the first 4 digits of your agency code, followed by the first 3 digits of your program code. Refer to Appendix II for the units of service measurement for each OCFS program. And changes. Section 68, Appendix II, the revision to Program Code 4920. The next section will be presented by Paul from OASIS.
Thanks, Ann. Hi, this is Paul Sutton from OASIS, and I'll be going over some of our highlights and changes. This is a picture of our office at 1450 Western Ave in Albany. Now, similar to other agencies, OASIS also has penalties for late submission of your CFRs, and OASIS consolidated fiscal reporting requirements will be imposed in accordance with the policies and procedures described below. Now, various sanctions for late submission may include the imposition of fines, withholding of advanced payments, and ultimately termination of state aid, and notification of noncompliance to the DOH in the case of Medicaid providers. This is contact information for the various OASIS departments. If you have budget questions, contact the budget department. Is there a claim email and phone number for the claims departments if you have claiming questions, and contact info for our CFR review unit. A CFR submission is not complete without the submission of the required certification schedules and audited or reviewed financial statements. The preferred method of signature page financial statement submission is the electronic filing to the CFRS upload page. Now, providers must keep original signature certification schedules and attestation statements corresponding to those emailed for the required retention period, and must be able to make these documents available upon request to OASIS and any other stakeholder or governmental controlling party. However, OASIS will continue to accept emailed PDF files of the CFR-I, II, III, IV, attestation, and financial statements. However, if you're going to email them, they must be named in the following naming convention. Now, copies of all required schedules submitted by email must be in PDFs, and the DCN number on the emailed PDF must match the DCN of the uploaded CFR files and the original signature copies maintained in the provider files as indicated above. For additional guidance, refer to Section 2 of the CFR Manual. In order for your certifications to satisfy the submission requirements, the following issues should be avoided: partial or blurred images. If we can't see the certification, we can't read it, then we can't accept it. Finally, a new CFR-I, III, and IV need to be submitted for each new DCN uploaded. Note that subsequent to a CFR-II being received, OASIS will accept an attestation reporting minor changes in lieu of the additional CFR-IIs. OASIS providers are responsible for updating their own contact information in the provider directory system located at the below address. Anytime you have staff changes, You should update the contact names, email addresses, and phone numbers. This will ensure that providers and programs receive important communications from the OASIS Communications Office, as well as providing current contact names and phone numbers for prospective clients. Section 3 of the manual regarding reporting periods has been revised as follows. If a service provider is receiving aid to localities funding through a county contract or direct contract and is required to submit an additional mini-abbreviated CFR, then OASIS reserves the right to require an uncertified full CFR in lieu of the additional mini-abbreviated. Section 38, Appendix E. The following program titles, descriptions, and/or units of service have been modified. Section 2050, 2150, 3520, 3530, and 4920. In Section 38, the definition of a unit of service has changed for programs 2050, 2150, 3520, and 3530. The new definition is below regarding threshold visits. Each time a patient crosses the threshold of a facility to receive services, without regard to the number of procedures provided during that visit, you count only one threshold visit per patient per day. For OASIS opioid treatment programs, OTP, billed under an ambulatory patient group, the facility should report the number of threshold visits, not the weekly claims. For example, a patient has 5 threshold visits for the week in which methadone was dispensed and 1 weekly claim is submitted. You report the 5 threshold visits. Similarly, if a patient receives a 30-day take-home dose in a single threshold visit, report the 1 threshold visit. The OTP bundles for rate code 7969 through 7976 are billed and paid weekly, regardless of the amount of patient-provider interaction during the week. Each billed week for these codes should be counted as a single threshold visit because there's only a single payment amount for each week. Centers of Treatment Innovation, or CODI funds, should be reported as a federal grant and identified as CODI. The submitted CFR should include expenses and revenues associated with grants from other state agencies or federal grants, whether your agency receives a grant through the Research Foundation or directly from the respective federal agency. State Opioid Response, or SOAR, is a federal grant awarded by the Department of Health and reportable in the drop-down box under federal grants. The fiscal year 21 Substance Abuse Prevention and Treatment, or SAPT, block grant supplemental awards in your annual consolidated fiscal report submission should be reported as follows. For core reporting, as stipulated in the CFR and claiming manual, providers are required to report all revenue and expenses from all sources, including all grants, on the CFR core schedules. For claims reporting, you must claim any expenses covered by SAPT grant funds on the DMH2 claiming schedule within the individual programs in which they incurred. The offsetting grant funds should then be reported as federal grant revenue as SAPT supplemental on line 24, not as OASIS net deficit funding or state aid. Please note that SAPT supplemental grant funds are intended to increase support of your agency's SUD program expenses, not supplement other available funding. Because the contract period for the SAPT supplement grant funds does not coincide with the standard funding period, you will report the expenses and use of the funds in the fiscal period they occur. As a result, you may report expenses and revenues associated with the SAPT grant funds in more than one fiscal period. In order to ensure accuracy in reporting, OASIS performs multiple reviews of the provider and its CFR submissions. The Fiscal Audit and Review Unit, or FARO, and the CFR Review Unit will perform reviews of the submissions and any supporting documentation. The reason for these reviews is that accurate and complete data, CFR data for OASIS programs is critically important for OASIS fiscal policy development and analysis. Cost report data is also requested and used by other New York State agencies and the federal government for a variety of different purposes. The following are some examples of the items covered in the review. Our supporting documents such as signature pages, financial statements completed and submitted are all active programs reported. Does the CFR2 column 1, line 7, 9, and 10 match the financials? Is the CFR2A completed? Are non-allowable expenses reported on the CFR1, line 40, or the CFR3, line 17, adjusted out accordingly? Are the hourly equivalents of the CFR4 within reason? Now, we define hourly equivalents as dividing the total number paid, or the total amount paid, by the total hours paid. Is the CFR 5 and 6 completed? Is the SUPP-1 completed? In Section 59 of the manual, regarding in-contract versus out of contract, OASIS reporting guidance has been updated, stating that a provider that receives state aid funding for any OASIS program must therefore report all programs operated, whether or not funded or not, on the claiming schedules. Further, if the provider does not operate any state aid funded programs, they are not required to complete the claiming schedules. Now, claiming has instituted a 2-year closeout. OASIS has implemented a 2-year closeout process to help mitigate the financial impact of the COVID-19 pandemic for fiscal periods 1920 fiscal, 2021 fiscal year, and calendar years 2020 and 2021 that will net the reconciliation results for years 1 and 2. Providers will be notified of the results of the year 1 and 2 reconciliations, including the net result and any calculated recovery of state aid. Any questions on this 2-year closeout process should be directed to the Claims Department. In accordance with Chapter 788 of the Laws of 2021, for claiming purposes, OASIS providers are not required to report Federal Paycheck Protection Program, PPP revenues, or other extraordinary federal funding as determined by OASIS, provided directly to providers in response to COVID-19. For core reporting, the providers are required to report in accordance with the accrual basis of accounting with reporting of such revenue on the DMH-1 line 25 federal grants. For claims reporting, revenues from PPP or other extraordinary federal grants are not required to be reported on the DMH-2 claiming document. For additional guidance, contact us below. This does not apply to any federal funding paid to providers from OASIS, either through a direct contract or via the State Aid Funding Authorization, or SAFA, such as SAPT Block Grant Funds, or any awards made under the Supplemental Federal SAPT Block Grant Awards. Please note that this guidance may result in the need for providers to submit a revised claim for the 1920 fiscal, 2020 calendar, 2021 fiscal reporting periods. Grant revenues must be applied consistent with the terms and conditions of the federal grant, including required reporting. Expenses may only be covered by one reimbursement source. Unspent state aid will be recovered through the usual process. Providers intending to submit a revised claim for the prior periods mentioned above must notify the claims unit by December 31st, 2021. Revised claims for these periods must be submitted no later than January 31st, 2022. If you would like to submit but have missed the December 31st deadline, we recommend you contact the Claims Department as soon as possible to discuss your options. In continuation of our review process, next we look at the claims. Previously, we recommended from the bottom of the DMH1, select the Transfer to DMH2 button in order to begin the creation of the claiming schedules. Now, after transferring the data, you can make manual adjustments to the DMH2 if required. We would not expect adjustments to be made in the reporting for the personal services, fringe benefits, and OTPS expense categories unless there is also a change in method of accounting. However, adjustments are likely for the remaining categories. For vacation leave accruals, the software will not transfer vacation accruals from the core schedules, as it is considered a non-reimbursable expense. For equipment and property, following adjustments are allowed: the addition of an expensed item in the period it was purchased, and subtraction of a non-reimbursable expense such as depreciation, interest, real estate taxes, and mortgage expenses. The CFR software has been updated to include drop-down detail boxes in order to individually list the adjustments from the core. Either select a predefined line or add a new one. Then, for the new line item, select either addition or subtraction to individually list the addition of a fully expensed item or the subtraction of a non-reimbursable expense item. The net amount of these program expenses will transfer to the respective DMH2 line 9 or 10. Here's an example of the DMH2 line 9 for equipment, the drop-down box for equipment. Approved software now includes the following predefined entries: depreciation vehicle, depreciation equipment, and vehicle interest. Here is an example of the drop-down detail box for DMH2 line 10 property expenses. Approved software includes the following predefined entries: building depreciation, mortgage, capital improvement interest, mortgage expenses, real estate taxes, and interest on capital indebtedness. Now, after completing this drop-down box and selecting Save, the net amount will populate the DMH2 lines 9 and 10. Administrative expenses reported on the CFR3 that are deemed non-reimbursable must be prorated to determine the OASIS portion to be adjusted out of the claim on the DMH2 line 12. The prorated share is derived for each program by first dividing the program's total operating cost from the CFR1 line 64 by the total agency operating expense on the CFR3 line 51. Then you multiply the total of the non-reimbursable costs reported in the CFR3 by the percentage calculated in that first step. Finally, you report this amount on the DMH2 line 12 in the specific program. Here is an example of the DMH2 line 12 detail box. And please note that the DMH2 line 12 is used to report other than property and equipment non-reimbursable expenses, as well as the prorated percentage of non-reimbursables from the CFR3 agency administration expenses just discussed. Also included on the DMH2 line 12 would be early retirement incentive payments, ERIP, and severance pay. These expenses should be reported fully on the core reports and claim as they are allowable, and then adjusted out on line 12 as they are non-reimbursable. Next, we go to the CFR5 review. An expense is considered non-reimbursable for Any expenses considered non-reimbursable for a provider would also be considered non-reimbursable for a related party. Therefore, any depreciation expense or mortgage interest noted on the CFR 5, Section C, which was used to validate the expenses in Section B, may need to be adjusted out either fully or partially based on the source of the expense. And here's an example. Note that the amounts from the CFR 5, Section C, columns 4 and 5, and possibly the items in column 8 for other, may need to be adjusted out as non-reimbursable for claiming purposes. Lastly, once we've sent you our review letter, after we've gone over all aspects of your CFR, we would then expect a response from your agency, and if you agree with our findings, the CFR should be revised and validated. Then obtain a DCN and submit it to us in PDF format along with your written response. Once we have confirmed the corrections are made, you will then be asked to upload your CFR and submit the required certification pages. If you do not agree with the findings, please provide additional explanation along with supporting documentation and clarification of your position. Generally, we allow 30 days or less for your response. I'll now pass the microphone off to the next speaker.
Hello, this is Francis Vasalio of OPWDD's CFR unit. I work in the building here, which is contrary to what Ann Hoffman said, the OPWDD building in Albany. Perhaps we'll have to have a thumb wrestling match to determine the naming right. A couple of reminders for you. If you have supervised IRAs, you're going to report not just your units of service, but also your therapeutic leave days that you bill, plus all retainer days billed at the 0 rate. Report all this line CFR 1, line 13A. For those of you with respite programs 0311 and 0312 who have sometimes per diem billing, each of those per diem days should be reported as 96 quarter-hour units of service. OPWDD, just to make it more difficult for you, requires you to report some of the programs by site. There are 5 programs, ICFs, DAHABs, Prevoke, and supervised IRAs. We know it's sometimes difficult to separate the expenses for the different sites. They may be located in the same building. We've given you some recommendations on how to allocate some of those expenses in Appendix FF of the CFR manual. The penalties, as I mentioned yesterday, for OPWDD are probably the stiffest ones. This is not because we're bad guys, it's because the feds came down on us pretty hard. If you don't meet the filing deadline, you're going to be subject to 2% of all your Medicaid billings until the end of the month in which you come into compliance. So if the filing deadline's December 1st and you don't file anything until December 7th, then you're still going to be penalized until January 1st. And unlike some of the other agencies who withhold funds, the 2% that we dock you, you do not get refunded when you come into compliance. Also, on August 1st, well, I said December 1st before, that would be for a fiscal filer. You guys are calendar filers, so your deadline for us is June 1st. If you haven't filed by August 1st, you're going to be subject to a 50% penalty. Don't think this is an idle threat. We're imposing this penalty on some agencies as we speak. And a lot of you would not be able to continue if you were only getting 50% of your rate. Some of you have funds available for residential reserve for replacement, but you've been reporting those R&M expenses in the program column itself instead of using the different program codes that we've made available for RRR. You have to report those expenses separately from the regular program. There would be no revenue in these new program columns that you would put on your CFR. And if you fail to report them separately, you run the risk of losing that funding. CFR-1, line 68A, B, D, and E are for OPWDD's use. They only apply for certain programs that we refund you the expense of transporting your clients to and from their home to the program. But you can't get that reimbursement unless you report it as I'm going to explain. The first step would be to record all the expenses associated with that transportation in either Program Code 0670 if you're using your own staff and vehicles, or Program 0880 if you're contracting out to a transportation company. Once you've listed all the expenses, and they will draw some admin, that's fine, you will then allocate that expense back to the different programs or program sites on CFR-1, line 68B. If you don't report it this way, you could be subject to losing that reimbursement, which will affect your rate for the following year. Line 68A is also reimbursed, and that's for other expenses for those same clients to and from other than the home to the site. Perhaps you have to take them to a medical appointment or something like that. Line 68D, some of you have program administrative offices that are separate from where the program is being conducted. If that's the case, and you have separate program administrative building expenses, property expenses that are included in your program expenses, we want you to pull out the part that's for the program admin and report it, the amount on, you're going to leave it in the program, but you're also going to give us that piece of it on line 68D. Now, if you've got a program on one floor and one little corner of it's got the desk where you've got your program administrator, you don't really have separate property expenses, and you can report a zero there. If you've got a two-story building and the program administrators are upstairs and the program is downstairs, you may have separate program expenses to report. Line 68E, the federal government wanted to know how much they were being billed for day services for ICF residents. Some of those expenses are by the ICF administrator because you report those, you bill for those services yourself. Sometimes you subcontract out some of those expenses to another providing agency. In that case, you need to contact the other agency to find out how much they're billing Medicaid for those clients in your ICF. Add that to whatever you're billing Medicaid for those clients, for all your clients in your ICF, and report the total on line 68E, CFR-1, line 68E, for each ICF site. If you are operating ICFs, we have two supplemental schedules that you fill out for OPWDD. The first one, OPWDD1, you list the services that you provide in your ICF. If you mark an X in column 2 or 3 for providing medical supplies, then you get to fill out OPWDD2, which gives us more detailed information about the costs associated with those medical supplies that you're providing. OPWDD 5 is only applicable to the programs listed on the screen. This is what it looks like. What we're trying to get from you here is you're going to list for us the amount of reimbursement you received. The Department of Health posts this information at the OPA site where you get your rates. So that's what you put in column 1, and the information they post will tell you what purpose they're giving you this extra funding for, whether it's for depreciation, whether it's for mortgage interest, et cetera, et cetera. If you don't have anything from them for certain lines, you don't have to put zeros in. Column 2 is where you put the expense that you've incurred that goes with that extra funding you're receiving. We give you in column 3 a clue where to go look for that expense. Now keep in mind that everything you've reported on CFR 1, say line number 51 there, is not necessarily related to what we're giving you that extra funding for. So the amount that is related, you report in column 2. So column 1's what we're giving you extra, column 2's your expense. Column 3's the difference. Column 5 is you explain the difference to us. So if your expense is greater than what we're giving you extra funding for, one of the drop-down pre-filled line options is unfunded. If you're actually receiving more than you reported as an expense on column 2, there may be a reason for that. It may be that it's for a prior period payment, or it may be that it's a difference in the depreciation schedules, timing difference, and you would indicate that. If you're not receiving any extra funding for these programs or program sites, you'll still have to put a 0 on line 1, column 1, and a 0 on line 1, column 2 in order to be able to validate. We made a slight change to job title code 192. It used to be for DSP at a certain rate. We've changed it to a generic DSP job titles because the rate varies from year to year. Also, we added some retainer days due to COVID for some of the other programs that didn't have them before. If you received some of that, you should report those units of service you were able to bill for at 96 quarter hours per day, and you would report them on line 13A of Schedule 1. And that's the end of our section. I'm going to hand off now to Jahida of SED.
Jahida, you might be on double mute. Jahida, we cannot hear you. Nelly, would you please step in? We cannot hear Jahida. Sorry, everyone, for the technical difficulties. We're going to try to figure out what's going on. Nellie, or if you're on, would you please fill in for Jahida? We cannot hear Jahida. Jahida, we still cannot hear you. Sorry, everyone, for the technical difficulties. We're working on it, and we'll begin in a few minutes.
Can you hear me now from Nellie?
Yes, we can.
Okay, thank you very much. Sorry about that. Hi, my name is Jahida. I'm from SED. ED highlights, supplementals, and changes. We will start with the rate setting website. And on this page, you will find the CFR manual and forms, reimbursable cost manual, tuition rate setting methodology letter that describe how a particular year tuition rates were calculated, and each year outlining parameter of rate setting process. The SED providers need to register for access to RSU tuition rate processing application, and you will be able to review and print tuition rates and access other Statfin Health screens. We have also included a link to register to receive SED rate setting issue notification by electronic mail of the latest memoranda and other technical assistance documents available on the RSU website. The 2021 calendar CFR due date and request for extension. For SED filers, the due date for the calendar year 2021 CFR is May 1st of 2022. A 30-day extension will be granted to SED providers who electronically complete and submit the pre-approved 30-day extension request by May 1st of this year. The extension request must be electronically completed and submitted, and no response to this extension request will be sent. Therefore, you should print a copy for your records. A link to the pre-approved 30-day extension request will be available on the CFR manual homepage on the link provided. Late submission penalty. No interest expense on working capital loan will be reimbursed for entity that file cost report after 90 days of the due date, which is August 1st of this year for the 2021 calendar CFR. And interest penalty due to the late submission.
I'm sorry. So the PowerPoint's not going with you. I'm assuming you're working on Nellie's computer right now.
Yes.
So I'm going to pass the presentation rights to Nellie. I'm sorry.
That's fine. Thank you. Can you see slide number 258 now?
Yes.
Yeah, I'm sorry for that. I'm so sorry for that. We are on the late submission penalty. So the no interest expenses on working capital loan will be reimbursed for entity that file cost report after 90 days of the due date, which is August 1st of this year, for the 2021 calendar CFR. An interest penalty due to the late submission will affect the tuition rates for the tuition rate year 2 years after the report year associated with the required financial reports. For calendar 2021 CFR will be applied to all tuition rates for the 2022 and 2023 rate year and will apply to all tuition rates, prospective, appeal, recon, and audit. SED supplemental schedules. There are 3 supplemental schedules specific to SED. SED-1, SED-4, and COVID-19 as informational schedule. SED-1, program and enrollment data. This schedule is to be completed by all service providers requiring tuition rates from SED for school age, preschool, and infant programs. The top half of this schedule collects student enrollment by program by full-time equivalent, FTE. These enrollment figures should correspond to the tuition revenues reported on line 69 and or 88 to 92 and or line 94 of Schedule CFR-1. On SED-1, lines 100 to 107 report total FTEs by funding source. On line 109, report number of days in session. Calendar year filers need to enter the number of session days in each segment reported, January to June, July, August, and September to December. Calculate CARE days by multiplying the FTEs by session days. For SEED programs, half-hour units of service are reported as follows. On Schedule SED-1, line 111, report mandated SEED units of service based on student IEPs and enrollment. On Schedule SED-1, line 115, report actual units of service of SEED service provided. The mandated SEED unit of service should be reported by county in the appropriate programs to the student IEP. The individual session should be reported in program 9135 to 9139, and group session should be reported on program 9140 to 9149. Additionally, the mandated unit of service should coincide with the actual unit of service. For example, if students' IEP indicates they are mandated for group session, their unit of service should be reported in program 9140 to 9144 if they received services in group of 2, or in a program 9145 to 9149 if they receive services in group of 3 or more. The student enrollment is reported as a full-time equivalent, and students admitted after the school year or discharged before the end of school year should be prorated based on weeks enrolled. FTE is calculated based on weeks enrolled divided by the number of weeks program is in session. Full-day programs are 5 hours of instruction. So students in programs operating less than 5 hours per day should also be prorated based on 5 hours day. CARE days are established by multiplying the student FTE times the session days in school year. And CARE days are used to calculate a per child, per day tuition rate, which is used in the rate setting methodology. When reporting the FTE enrollment for students with one-to-one aid, include the student FTE in both the 90-30 program and the program the student is enrolled in. The approved classroom ratio is reported on Schedule SED-1, lines 201 to 901, and for each program, enter the approved classroom ratio from your SED program approval letter for the class ratio that operated. For calendar year providers, the 10-month number of classrooms should be reported using a weighted average of the number of months the classroom operated for the reporting period as a percentage to the 10-month school year. For example, if your agency operated 2 classes for January to June and 2 classes for September to December, the weighted average number of classes would be calculated as follows: 1.20 classes for January to June, which is 2 classes times 6 months divided by 10 months, and 0.8 classes for September to December, which is 2 classes times 4 months divided by 10 months. And this is a picture of SED1 schedule, and each SED school age, preschool, and preschool evaluation programs need to be reported in 6-month segments, January to June in one column, the SS column, and July to December in another column, the FF column, for SED1 schedule, and it's also for CFR1, CFR4, and CFR4A. Related services SED4. SED4 is broken down into 3 sections: capacity, need, and productivity. SED4 schedule is to be completed on fiscal year basis, July to June, even if you are a calendar year filer. This is a picture of SED4 schedule, and the SED4 is required for all rate-based programs except for CED programs. Related services RS2 information. Schedule RS2 does not need to be sent to SED, so please retain a copy of this schedule for your file. Instructions and an Excel version of RS2 schedule are available on the Rate Setting Unit website under Manuals and Form. Data from RS2 feed into SED4 and complete one RS2 schedule per program per related service type, and Schedule RS2 has a new column, column number 13, to report sessions not provided due to accessibility issue related to delivering services via telepractice. SED changes. On Section 7.0 of the CFR Manual, the reporting guidance was added for COVID-19 as informational schedule. Section 8.0 of the CFR Manual was updated as follows. The FAQ relating to bad debt expenses was updated. The FAQ section was added relating to PPE loan forgiveness. General instructions related to one-to-one teacher aid were updated. Section 33C of the CFR Manual and Schedule COVID-19 as were updated to differentiate between the Payroll Protection Program PPE first and second loan draw. Section 41.0 or Appendix H, the following SED programs have had program title description and or unit of service modified, and the SED 9039 program code was deleted. The reporting instruction for the personal protective equipment, PPE related to the operation of the program should be reported on Schedule CFR1, line 36, and the purchase of equipment exceeding $5,000 should be depreciated and reported on Schedule CFR1, line 45. Please note that CFR1, line 36, and line 45 are both classified as a direct care in the calculation of the tuition rates and the application of the non-direct care cost parameter. The PPE related to agency administration personnel and agency administration areas should be reported on Schedule CFR3, line 17. And please refer to the Appendix O for further guidelines. Thank you very much, and now I will pass it to the next presenter.
Good morning. This is Alpa Amin from OPWDD. I will begin steps to a successful CFR submission section. Perform all data entry for all schedules and then validate submission to get a document control number. Then prepare for upload. You will need to connect to the CFRS upload page on the OMH website and individually upload CFR data, financial statements, and certifications. Validate submission and assign DCN. From the toolbar, select Utility and then select Validate Submission and assign DCN. Click Perform Validation to validate the entire submission. If there are any errors, a message box pops up highlighting and detailing the error in yellow. In most cases, clicking on the error will take the user to the screen containing the error. Correct any errors and repeat the validation process. When there are no errors in the submission, the software will assign a document control number. Now that a DCN number has been assigned, from the toolbar, select Reports in order to view or print all or specific schedule from your CFR. You have the option to select individual schedules or click Expected to highlight all schedules in the submission type completed. Clicking Send to Printers sends the document to the user default printer. The default is to print on legal size paper. When printing to 8.5 by 11 size paper, first print to the PDF and then adjust the paper size. Clicking Write to File displays the document on the computer screen in Notepad. Inventory lists the program size defined and other identifying information about what is in the submission. This can be useful in diagnosing the problem. Advance allows for printing only selected invoice agency and or county schedules. Where is the current destination? Current destination for prepare for upload file located. If your CFRS software was installed to the default location, your upload file will be located in the directory dependent on your software version. Or you can use the browse for a new directory if you want to install the file in an alternative local online location. After the upload file has been prepared, a confirmation messenger box pops up. Take note of where you are saving the file by either printing the screen or saving to your desktop, as you will need to locate the file in the later step of the submission process. Click Close to close the messenger box and then click Go to CFRS upload page. Pop-up window informs you that you are being redirected to the OMH upload portal page. Click Yes to continue. From the bottom of the screen, select Upload your CFR submission or financial statement. You will also be able to upload the completed budget, certification pages, supplemental attestation schedule, and parent agency administration allocation from this screen. Enter your 5-digit provider agency code and press Next. Choose the type of documents to upload from the drop-down bar. Follow the steps as outlined in the software. You will have to go through this process several times as the CFR, financial statements, and certifications need to be submitted separately. This is an example of a confirmation email. It is recommended that you save a copy of this email. To back up a data from the toolbar, select Utility and then select Backup Data. You must close all screens in order to effect the changes in Invoice Banner page. The software will apply the changes to the last file that you were in. Remember to back up your file in 2 or more locations. From the Help menu, there is a guidance to assist you in the backing up of all CFRS data or backing up of a single submission. Converting CFR 4 details to CBR 4. The Consolidated Budget Report is a series of schedules created in the CFRS software and used to fulfill fiscal reporting requirements related to recent receipt of state aid. When importing master data from a CFR to a CBR or vice versa, there is a second step which includes using the Convert CFR 4 to CBR 4. After the initial conversion, you will receive a reminder message regarding the second step, which will indicate that CBR 4 position title code have been imported. However, you will need to use the Convert CBR 4 to CFR 4 screen on the utility menu to transfer position title code to CFR 4. Change or delete funding source. From the Utilities menu, you can change or delete funding source codes. Update or delete agency definition. From the Utility menu, you can update or delete agency definition. This screen shows the links to online help and what is new in each version of CFR. This concludes my section. I will pass off to the next speaker, Michelle.
Good morning. Next, we'll discuss the Supplemental COVID-19 Informational Schedule, which was developed to measure the impact of the COVID-19 pandemic on each provider. It is required for all CFR submission types for OMH, OASIS, OPWDD, DOH, and OCFS providers. State ed providers complete the COVID-19 schedule in lieu of the COVID-19 schedule. It is independent of other CFR schedules, and information on the COVID-19 schedule does not transfer to any other CFR schedule. Instructions for this schedule are located in Section 33B of the CFR manual. Complete the COVID-19 schedule on an accrual basis of accounting. It is not subject to certification, but should be reviewed for reasonableness. Report on the COVID-19 schedule: increases in program administration and program site expenses and increases in revenues in the reporting period related to dealing with the COVID-19 pandemic on a program site specific basis. Report expenses incurring revenues earned for the reporting period on appropriate lines, and if there is not an applicable line, please report the revenue or expense item on the other line. There are 3 sections in the COVID-19 schedule: general information, program site data, and personal services. The first section is the general information, and the agency is asked a series of questions. Question 1A, ask the agency if they've received a first draw and or second draw Paycheck Protection Program loan from the SBA. If the answer is yes, proceed to question 1B, where the amount of the first draw or second draw loan your agency received is reported. And then in 1C, enter the date of the loan that you received. And in question 2A, ask the agency if the PPP first draw or second draw loan has been forgiven. If the answer is yes, proceed to 2B and enter the date the loans were forgiven. And on 2C, enter the amount of the loans that were forgiven. Question 3 asks, report the total amount of revenue and gains on the extinguishment of debt recorded in the CFR reporting period that was attributable to COVID-19 funding, grants, loan forgiveness, contributions, awards, and or tax credits. So in question 3, the total and revenue and gains on that question, you should include the COVID-19 grants awarded by governmental agencies and private foundations, the amount of the PPP loan forgiveness recorded, either as revenue or a gain on the extinguishment of debt, federal COVID-19 tax credits that were recorded as revenue, and monetary donations that were received to deal with the COVID-19 pandemic. Next, click on the Program Site Data section. Expenses are reported in this section that were increases in expenses related to dealing with the COVID-19 pandemic. Examples include personal protective equipment, personal services in excess of normal, such as overtime and hazard pay, and personal services expense of program staff that were reassigned to support activities necessitated by the COVID-19 pandemic are reported here. Costs of temporary housing for COVID positive residents or exposed staff are included in this section. Costs of cleaning services and machines, increased telecommunication expenses, expenses related to storage facilities and security measures necessitated by the COVID-19 pandemic, and interest on debt incurred to maintain staff are reported in this section. In addition, FEMA costs for emergency medical services, such as emergency medical care for COVID-19 patients, medical supplies, medical testing and vaccination training, AOCs, and meals and meal supplies for emergency workers, as indicated in the FEMA publication cited on this slide. In the revenue section, report only the COVID-19 funding that was recorded as revenue in the CFR reporting period, such as the CARES Act loans, which include the Paycheck Protection Program, the Economic Injury Disaster Loan Program. Report enhanced rates, retainer day billings, and flexible billings that would not normally qualify as service that were increased due to the COVID-19 pandemic. Report COVID-19 grants awarded by governmental agencies and private and or public foundations. Report monetary donations and COVID-19 federal tax credits recorded as revenue. Report federal grants on line 64. There are a number of predefined entries, such as the Paycheck Protection Program, federal tax credits, COVID-19, FEMA, FCC, etc. Next, click on the Personal Services tab. This is the third section of the COVID-19 schedule. The schedule is completed similar to Schedule CFR-4. Report only the personal services expenses that were incurred by your agency in responding to the COVID-19 pandemic. As with Schedule CFR-4, for each position title code that is added to a program site, the amount paid is entered. The total personal services expense for each program site transfers to line 1 of the program site data section of the COVID-19 schedule. And for more information, please refer to instructions for Schedule CFR-4 located in section 16 of the CFR manual. And that concludes the discussion on the COVID-19 schedule. And Jahida will be your next presenter.
Thank you, Michelle. Hi again, this is Jahida from SED. I will be going over COVID-19 as informational schedule on this section. The COVID-19 as is required for all CFR submissions from SED providers, and it's completed independent from the other CFR schedules. The COVID-19 as schedule is used to report the net changes in program administration and program site expenses and revenues in the reporting period determined by the provider to be specifically related to COVID-19 pandemic. For additional information how to complete the COVID-19 as schedule, please refer to the instruction in Section 33C on the CFR manual. The COVID-19 as informational schedule is a 4-tab data entry screen, and the COVID-19 as schedule will not subject it to certification, but should be reviewed for reasonableness. Complete the questions in the general information section of the COVID-19 as schedule. For question 1A, select yes or no. If yes, proceed to question 1B. If no, proceed to question 3. For question 2A, select yes or no. If yes, proceed to question 2B. If no, proceed to question number 3. For question number 4, if you select yes, please make sure you are reporting the appropriate expenses and revenues on the COVID-19 as schedule. If you are a multi-funded agency, you will need to report the SED data separate from the other agencies you are reporting to. COVID-19 as expenses. The Personal Services section of the COVID-19 as schedule is completed in the same manner as the program-specific section of Schedule CFR 4. For each position title code that is added to the program, the standard work week is selected and the hours paid and the amount paid are entered. The total personal expenses services for each program transfer to line 1 of Program Site Data section of the COVID-19 as schedule. For additional information on how to complete the Personal Services section of the COVID-19 as schedule, please refer to the instruction for Schedule CFR 4 located in Section 16.0 of the CFR manual. The Contracted Direct Care and Clinical Personal Services section of the COVID-19 as schedule is completed in the same manner as the program-specific section of the Schedule CFR 4A. For each position title code that is added to the program, the hours paid and the amount paid are entered. The total personal services expense for each program transferred to line 20 of the Program Site Data section of the COVID-19 as schedule. And for additional information on how to complete the Contracted Direct Care and Clinical Personal Services section of the COVID-19 as schedule, please refer to the instruction for Schedule CFR 4A located in Section 17.0 of the CFR manual. The other expenses reported on this schedule should be the net change in expenses determined by the provider to be related to COVID-19. For example, if food costs were down because children were remote learning, line 6 of net change in costs incurred by program in providing meals or snacks to the program participants would reflect a negative amount. If supplies and materials increase because the provider bought additional PPE, line 21 on COVID-19 as informational schedule will reflect the amount of the PPE cost only. If any of the program-specific or program administration non-allowable costs have been included on Schedule CFR 1 through CFR 5, they should also be included on lines 51 on COVID-19 as schedule, and also need to report the detail of adjustment to reported costs by program along with the corresponding amount and line number where the cost is reported on Schedule CFR 1. And please note that the negative entry are not allowed on line 51 of the COVID-19 as schedule, and refer to Appendix X for more information regarding non-allowable expenses. COVID-19 as revenues. Report in revenue section of the COVID-19 as schedule only the net change in revenue and gains on the extinguishment of debt recorded in the period that were related to COVID-19. Including the revenue lines, the COVID-19 grant awarded from federal and or state agencies, counties, and private foundation, for example, FEMA, FCC, etc., the amount of the PPE loans that were forgiven and recorded as revenue, the COVID-19 federal tax credits that were recorded as revenue, donation received as a result of the COVID-19 pandemic. For line 53 and line 59 Only report the revenues received after netting out any negotiated contractual adjustments. For example, if your agency has a published fee of $105 and has contractually agreed to pay $75 per visit for patient covered by the health insurance company. For each billable visit by person covered by health insurance, your agency will report $75 in revenue, not $105, with a $30 adjustment to revenue. These are the revenue lines for COVID-19 as informational schedule. Line 55, 56, 57, 58, 61, and 62 are not applicable to SED. That will include my section. Thank you very much for attending this training, and I will pass it to the next presenter.
Hi, this is Paul Green from Oasis. The final other supplemental is a SUPP-1, which is the upper payment limit. The SUPP-1 schedule collects data for use in the upper payment limit calculation. The UPL is a federal limit placed on fee-for-service reimbursement of Medicaid providers. Hospitals and federally qualified health centers are exempt from completing the SUPP-1 schedule. All OMH, Oasis, and OPWDD providers who complete a full CFR and operate any of the following program types must complete the SUPP-1. And the specific programs are listed under each individual state agency. Providers who fail to submit CFRs or submit inaccurate or incomplete information may lose any supplemental UPL payments they would otherwise be entitled to. So this is a screenshot of the input section. So the first question is the provider agency a hospital or federally qualified health center? If the answer is no, then you must complete the rest of it. If the answer is yes, then you are done. You do not have to complete the SUPP-1, okay? In this case, the answer is no. Next, you pick the state agency, and then you pick the program. There's only 4 programs, and if you don't operate in any of those 4 programs, nothing will be listed there. You will not be able to complete the form, okay? But in this case, you're an Oasis provider, and you're picking program 3520. It comes up with a site. So now you have to fill in the columns 1, 2, and 4. Column 3 is a adjustment allowance and is automatically calculated. You fill this in for rows 1, 2, and 4, okay? Medicaid fee-for-service, row 2 is Medicaid managed care, and row 4 is all other payers. That would be state aid, any other revenue besides Medicaid fee-for-service and Medicaid managed care, so state aid and such. Once you have completed these in, they calculate in total automatically. The tricky part is the number of total threshold visits by the payer. For purpose of the schedule, a visit is defined as including all services provided to a patient on the same day, okay? I'm not going to go into the full description of this here because you folks have been doing the SUPP-1 and you've been doing it quite well. But keep this in mind when you are determining what is a threshold unit of service, okay? For Oasis, billed under ambulatory patient groups such as rate codes 1564 and 67, while often claimed weekly, receive a Medicaid payment for each day during the week on which a patient interaction occurs. Therefore, each day of service on a weekly claim should be counted as a Medicaid visit, and the facilities billing Medicaid under an APG should report the number of daily visits in the total visits column, okay? And also, we discussed previously the Oasis change this year for the bundle rates, and that is listed below. So that is the SUPP-1. The rest of the presentation is directed toward agencies that submit a claiming document, DMH-2 and DMH-3. If your agency does not, then you may leave at this time, okay? For example, agencies that file a claiming document include those receiving state aid or local aid in the form of net deficit funding. Agencies that do not file a claiming document include OASIS, OMH, and OPWD providers that do not receive any state aid for any programs. Also, SED, DOH, and OCF providers. Okay. So again, if you receive state aid, you're going to want to stay on for the claiming documents, DMH 2 and 3. If you're an SED, DOH, or OCF only provider, and you don't receive any state aid, then you are done for today. Okay. If you are unsure which case you fall into, just stay on. It's only going to be a few more minutes. Okay. So continuing on, budget modifications. Francis mentioned it yesterday, but I'll mention it again. If you haven't done so, compare your projected expenses and revenues to your approved budget now. If it appears a modification to your approved budget is required, consult the funding New York State agency for guidance. It's always better to address these things earlier than later. Okay. So claiming, you start with you were at the DMH-1. You were completed with the DMH-1. We discussed that yesterday. You felt good about it. So down on the bottom left-hand corner, you click Transfer to DMH-2, and that will send everything as is over to the DMH-2. Okay. But then you can go in and make your changes, all right? But this is the next step in the DMH transfer process. First, you pick your state agency, and then you pick your county. What county do you wish to send it to, and the percentage that you want to send it to, okay? Over to the right are a list of all your programs. You can select one program, several of the programs, or all of the programs. If you hold down the control and then click, you can select individual programs. So in this case, I've selected 3 programs that I wish to transfer over to this county, and I wish to transfer over 100% of each of these. Okay. A little more complicated, but still doable. If you were a Warren, Washington provider, you had 50% of the programs in Warren County and 50% of it's in Washington or something to that effect, you could do that. You could select Warren County for 50%. You could select Washington County for the additional 50%. You could select the individual program, and then you could click the transfer button, and they will transfer as such. First thing it's going to come up with is saying that there's already data on the DMH-2 for these programs. And do you wish to continue? Do you wish to override it? And the answer is yes. You wish to continue. You wish to override it because what you're putting on is the most recent and the most accurate information. Then it will say that you have successfully transferred the information, okay? But there's a note. Some of the DMH-2 lines require detail input. So in other words, the total transferred for revenue, Medicaid fee-for-service, line 17A, and there's an asterisk here in front of it, so you know that this is a line. Also, the line is actually dark gray. But you know that there's a drop-down box. And anyone that has an asterisk or is dark gray, there's a drop-down box. Well, in this case, the total 449 has transferred, but you have to go over to the right. You have to click on the drop-down box, and you have to input the description and the total in the line details box, okay? And then they have to match. And if you don't do this, you will be reminded when you're going through the validation process. So again, the totals transfer, but the detail does not transfer in the drop-down box, and that needs to be done. Okay, so now you're at it, and you selected your state agency, OASIS, and you selected your county, and you selected your programs. And the first thing you say is, oh, I sent the wrong county over. I sent over New York. I meant to do Niagara. All right. you could go back and start again, but that will leave you with 2 counties open. That'll leave you with New York and Niagara, okay? So instead, what you want to do is go down to the bottom left-hand corner and click on the Change County button. Keep this in mind, and there's another screenshot of it in the DMH3 process. But once you click on that, then you can change the county, and then you'll only have 1 DMH2 open. Any other way, you'll have more than 1 open, and that will create problems when it comes time to validate. Okay. You have to complete these lines. You have to complete the contract type. Is it a direct contract, money coming directly from the state, or is it a local contract where you have a approval letter with the county? Okay. You have to select the accounting method. Your options are accrual, modified accrual, or cash. You have to input the state contract number. Generally, if it's a direct contract, it starts with a C0. If it's a local contract, it could be anything. It could be the first 7 digits of the county name, or it could be anything that the county gives you. But again, if it's a C0, it's usually a direct contract. So once you've put all that information in, and for display purposes, I left it as New York. But to continue on, now you go to all the information's in, and now you put in your expenses. Okay, again, a lot of these have transferred over from the DMH1, but if these are white lines. So if you don't like the number that transferred over, then you can go in and make that change. Okay. Later on in the expense variance, which is the last tab, you're going to have to explain why you made that change. If you change a number from agency admin, if you go from 57,000 and you go to 52,000, because that contract specifically only allows a certain amount of agency admin, well, then in the expense variance, you will say the claim only allows a reduced amount of agency admin, and that's the explanation. Okay. So these are all white lines. They're all changeable. Now, for OASIS, these lines are gray, which means they have drop-down boxes, and they also have the asterisk there. And that's where you're going to make your adjusting entries for the non-reimbursable expenses of depreciation and interest. Okay. So for OASIS, they're grayed. I don't believe the other agencies have any non-reimbursable expenses at this point. Therefore, their lines would not be gray. They would just be white. Okay. So this is the expenses, total adjusted expenses, $769,000. And you go to the next tab, and you have your revenues. And your revenues add up to $842,000, including $174,000 of state aid. So something to consider here is that you had $769,000 of expenses, and you have $842,000 of revenue. So you actually are going to have your net deficit funding is going to be reduced, right? Because net deficit funding is your last dollar in, which means you incur your expenses, you go out and you get any other revenue you can, vending machine, Medicaid managed care, other third party, and what you subtract all of that from your expenses, and the net amount is your net operating cost, and that's the amount that the net deficit funding will pay, up to that amount or less. Okay, we're not going to go above that amount. So in this case, we gave you $174,000, which actually puts you above it, but you'll see in the next couple of steps that we're probably going to be reducing that to net operating cost. The next tab is adjustments to revenues. We don't usually see a lot of adjustments here, but you can refer back to the CFR manual if any adjustments are necessary. Okay. Once you get past the adjustments to revenue, you get down to line 43, net operating cost. So that is your total expenses less all your other revenues except for state aid. Okay. Next tab over is deficit funding. All right. So deficit funding, you're going to complete this, and line 49 has to equal line 43. If it does not equal, you will not pass validations. Okay. Line 44, that is where you would put all the state aid and local government contract revenue. Okay, all the net deficit funding that comes from either the state or through the local government unit all goes in line 44. Line 45, local government share, that is for county tax dollars. Okay. Line 46, providers' voluntary contributions. And OASIS does not allow any input here. So this would be if the service provider was adding a voluntary contribution to the program. Then you have the total approved amount, and then line 48 is your catch-all. If, because again, line 49 must equal the total deficit funding. All right, so if everything above does not equal line 49, then there's going to be a positive amount in there as non-funded, okay? Which means you just had more expenses and revenues, and the balance is just not going to be funded to you. Sometimes if you had more revenue up on the top, then you would have a negative number here on line 48 in order to bring it down to the 101,000. So if you added up all your revenues up top and it was 174,000, you'd have to put in a negative number to bring it down to the 101,000. Okay. Some of the agencies are okay with that. OASIS does not like a negative number there. Therefore, we tell you for line 44, report the lower of the contract amount or the net operating cost reported on line 43. If you do that, you'll never have a negative number on line 48. Okay. So there's additional guidance in the CFR manual regarding this. But getting back to line 48 for non-funded, for OMH, this is a surplus or deficit of funding over expenses. DMH2, line 43, less line 47. Okay, surplus or deficit of funding over expenses. For OPWD, indicate the amount of all other funding used to support the net operating costs, which does not fall into lines 44 through 47 above. Again, that is in the manual and it's in your notes, so hopefully that will assist you. And then finally, line 43, total net deficit must match line 43. I'm sorry, 49 must match line 43. And then finally, the fifth tab is the expense variance. In this case, it was an OASIS provider, and we had to make an adjustment for the non-reimbursable equipment depreciation. So that is why there is an adjustment. There's a variance here. If there was no variance, 0 is the amount, then nothing is required over in the explanation. However, if there is an amount under the variance, then an explanation is required. Yesterday, I told you that the core reports are used for fiscal analysis, and the claims reports that we're talking about today are used to basically settle up your bill. We gave you money ahead of time based on your budget, and now you've experienced the year and you know what your actual costs are, and now we're trying to settle up what we gave you against what you deserve to get. There are differences in reporting of the core versus the claim, and presentation. There's differences in presentation. It doesn't happen often, but there was a time I recall years ago where, for some reason, for a specific program, they wanted all the purchases of furniture removed from that program's reporting. Okay, so what they told you to do was use this define a DMH only button on the top left corner of the DMH2. And basically, it allows you to create another column on the DMH2. So, and it gives you, you have to give it an additional index code number. You pick the program and an additional index number. And then you have an additional column here. You'll have to fill in the beginning sections again. You'll have to fill in the contract type, the local contract, the accounting method, the contract number. But then you could put $50,000 of expense here into its own column, okay? Two things to consider. One, you wouldn't do this unless they ask you to, unless somebody asks you to do it, okay? It doesn't happen often, but I just want you to know the software does have the ability to satisfy both the state and the counties. Okay? Sometimes they ask for things presented in different manners. The second thing to remember here is if you're adding $50,000 here, you got to remember to go back to the other column, to the original program, and remove the $50,000 there, because again, together these two columns should add up to the one program. So that's a define a DMH only program. Again, you won't use it unless somebody asks you to, but just keep in the back of your mind that you have the ability to break columns out. Summary. DMH2 is completed on a New York State agency and county specific basis. Method of accounting must be selected, accrual, modified, or cash. Director local must be selected, and it should match up with the contract number. Direct starts with C0, local, if it could be anything, and if you don't have anything to put in the first 7 letters of the county name. Agency administration is distributed between New York State agencies using the ratio value allocation. With OASIS and OPWDD schedules, the software calculated ratio value must be used on the claim, okay? So the agency admin determined on the core must be used on the claim, all right? In addition, the DMH2 is on all CFR types. It's for state aid funding only, not required for for-profits or SED, DOH, and OCFS programs. OMH, if any programs are state aid funded, then all programs operated must be reported on the DMH2 and DMH3. OASIS, if any programs are state aid funded, then all programs operating must be reported on the DMH2 and DMH3, same as OMH, except if no programs are state aid funded, then the claim is not required, okay? So that's the difference. OPWDD, DMH2 and DMH3 schedules are not required for programs funded by Medicaid without additional state aid. Additionally, if the method of accounting for the DMH schedules is other than full accrual, then at least one data element must be changed from the DMH1 to the DMH2. Final note on method of accounting. If you are changing your method of accounting from the previous year's used method of accounting, I believe you have to get permission from the local government unit, so keep that in mind. Okay. Equipment may be expensed rather than depreciated. Equipment costing $5,000 or more per unit and have a useful life of 2 years or more must be reported on line 9, and revenue details must be provided on the other lines. Line detail boxes are also provided for the following types of revenue. Line 17A, Medicaid. Line 24, federal grants. Line 25, state grants. State and federal grants that are not directly or indirectly associated with the funding programs should be reported in column 9 of the CFR2. Okay. In other words, these are federal grants that are directly related to this program. Okay. So you've done a good job. You've completed your core. You've transferred it to the claim, and you feel good about the claim. You submitted it, and one of the reviewers found what they thought was a questionable entry, and they asked you to correct it. Okay, and you agreed it was needed to be corrected. It was back on a CFR-1. It was a number that was changed. And now you've saved it, and you're gonna go get it validated and get a new DCN number. Well, you have to remember that that number that you changed on the core did not change on the claim. You have to transfer the information for that program over to the claim because, again, if you don't do it, it does not get automatically done. So every time you go back to the core and make an adjustment, you then have to transfer the numbers over to the claim again and make your entries again. Keep that in mind. DMH3 is all about funding source codes. The money we gave you has a funding source code attached to it, and we want you to report to us per program the funding source code that the money came from. Okay. In this screenshot right here, it's an OASIS program, counties in New York. Here's the program number, and the funding source code is 013S, which is state contract. Here's your direct contract number, and there's your direct contract selection. Here's your contract number down here on the bottom. So a lot of this information transfers from the DMH2 to the DMH3. There's one for at least one for one. There's at least one DMH3 for every DMH2, and a lot of this information will transfer. If for some reason it doesn't transfer, or if it changes, you'll have to change this too, because if the contract number written here doesn't match the contract number in a DMH2, it will not work. The DMH3 is actually very easy to complete. If you type in a number and hit save, it will come up with a list of errors, and it'll basically tell you what you need to put in there. It will say that your total expenses are 0, but they should be this. Your total revenues are 0, but they should be this. So just read the explanation, and it will make sense to you. What you're inputting here is number of persons served per year, number of units of service. Okay, so note that that is not true for all programs, so you could refer back to the Appendix E, F, and G. Some programs don't even have units of service or don't count units of service, so keep that in mind. But then you have your total adjusted expenses and your applied net revenue. Again, your total expenses are from your DMH2, total expenses, and your applied net revenue is all revenue listed on your DMH2 except for state aid. Okay. Net operating cost is the calculation, and again, that should match your DMH2. So all of those expenses came from this one funding source code. Okay. If next year you transfer this information and it's all there, but next year the funding source code changes, you don't want to click on a new funding source code because then you'll have more columns. Instead, click on the Change Funding Source Code down in the bottom left-hand corner. It will give you this box, and then you can select 013F, Complete Update, and then it will change all that information from a 013S to a 013F. Okay? So if you do not do this right, then what you're going to have to do is you're going to have to close and go to Utilities in the top menu, scan down where it says Update, Delete Funding Source Codes, and then you'll go in there and you'll delete the extra funding source code. But again, unless you use the Change button, you'll end up with 2 instead of just 1. Same thing for the county. If it turns out that the county was incorrect here, then you transferred this over, you can go here and you can change the county to whatever you like and then click the complete update. So try to keep those change buttons down in the bottom left-hand corner in mind. All right. This is an example where two funding source codes belong to one program. So in this case, the total expenses for this funding source code were $485,000. But if you look over to the right, that's $972,000 is the total for that program of all funding source codes, okay? So this is 072B, and that's your total expenses and your total revenue. And then you go to the next one, 073B, and this is an old example. But now here's the remainder of the expenses and the remainder of the revenue, and the total here is what's going to match on your DMH2, and that's what's going to allow you to validate. So in the old days, if somebody called me and said they were having trouble validating, I'd say, well, maybe you have an extra funding source in there. What are the totals over to the right? And she'd say, well, that's doubled. I said, well, that's the problem. You have two funding source codes. So this is a running total of all the funding source codes for that program. Okay. DMH3 summary. For OASIS and OMACE, the contract number and type indicated for each program on the DMH2 will be transferred to the DMH3, so you should make sure that it's the same. For OPWD, at least one contract number and type combination indicated for each program on DMH must match the information indicated for the program on DMH2. Okay. And all right. DMH3 is completed on a New York State agency and county specific basis. Funding source codes are found in Appendix N of the CFR manual. Contract numbers must be entered. Contract type must be designated, state or local. And again, if it's a C0, it should be a state. If you select local and then a C0, well, I'm sorry, if you select state and put in something other than C0, when it comes in, it may get rejected, and then you'll have to go back, make the change, and resubmit and get new signature pages. So again, match those up correctly. For each funding source, enter person served per year, units of service, total expenses, applied net revenue, net operating cost is calculated, and refer to the budget for funding source codes and amounts. And the total program gross revenues and nets on the DMH3 must equal total program gross revenue and nets on the DMH2, and this is where it shows how it's doing it. And on that note, we've done with the claiming. So I'm going to hand it back over to the host for finishing conversations. Thank you.
Thank you, Paul. And thank everyone once again for participating in the CFR training webinar for the 2021 calendar year. Before you jump off, just in case you missed the beginning of the webinar, please take time to fill out the post survey after you leave the event. It'll help us make these trainings better. Also, these webinars will be or have been recorded and will be posted online shortly. An email will be sent out notifying you of this location. And also, the Q&As will be carefully reviewed and answered. Answers will be posted online as soon as possible. So I'm going to leave the Q&A. I'm going to leave the event open for another 5 minutes just to give everyone some time to add any questions that they think that they need answered. And then in about 5 minutes, I'll end the event. So once again, thank you.